Today, our presenter, Trent Hunt and Paul Harrington, will outline life insurance strategies and the services and products that we can offer to our clients and prospects. The recorded version of this webinar will be available following the completion of the session. You can look for a link to the recording and the slide deck for future reference emailed to the email you registered with within the coming days. We'd love to hear from you, but we ask that you please hold all questions for our Q&A session toward the end of the presentation. However, the chat will be open and monitored throughout the entire webinar if you need clarification. For those of you just joining, welcome. Today's webinar will be presented by Trent Hunt and Paul Harrington. With 35 years of experience in the insurance industry, Trent serves as an executive partner and COO of the Kentuckiana region, as well as an active member of the mergers and acquisitions team. He spends his time uncovering new business opportunities for fellow team members on both insurance and financial services platforms. Our guest presenter, Paul Harrington, serves as CFO for Highland Capital Brokerage. He has more than 30 years of experience in the industry, specializing in providing a business support role to financial professionals in their personal estate planning and executive markets. Paul, the floor is yours.
Thank you, Catherine. Appreciate your help there. Welcome, everybody, and good morning. And we appreciate you joining us today. Again, we're going to be giving you guys a very high-level overview of things, various products and applications for life insurance that are currently out in the marketplace. With that, though, I've had the pleasure of being with Shepherd now 6 years after merging my own agency with Shepherd. And for those of you that are not currently Shepherd clients or maybe not as familiar with the background, but Shepherd has been an agency established in the Carmel, Indiana area and throughout the Midwest now for 45 years. Founded originally by Dave Shepherd. And we are a full service firm that offering benefits, property and casualty insurance for both businesses and personal, along with a variety of other insurance needs. To say we're full service would be an understatement. But with that, I'd like to introduce Paul Harrington to you. Paul and I have actually been doing business in the life insurance world now for 30 years. It's hard to believe, Paul, it's been that long.
Very hard to believe.
But as we go through things today, Paul will be certainly providing a great deal of perspective from the brokerage side and insurance carrier side of what's happening in the marketplace, as Paul has clients that he works with all throughout the country. And so you'll see some dynamics of us going back and forth as we go through the presentation. And Paul, would you like to give a little overview on Highland?
Well, sure. First of all, thank you for having me here, Trent. Really appreciate it. As Trent said, we've enjoyed a 30+ year relationship, and I began working with the Shepherd Insurance Agency over 25 years ago. Highland Capital Brokerage is a national BGA, a brokerage general agency specializing in the life insurance marketplace. We represent all of the non-mutual companies. We have over 100 companies in our portfolio. Having said that, we probably do 90% of our business with top 10 or 12, all household names from Prudential to Principal to Pacific Life and so forth. Our role is primarily backstage, if you will, in helping to select the products and the carriers to use. So again, thank you, and looking forward to spending some time with Trent here this morning.
Thanks, Paul. And with that, we'll move on and jump into things right now. All right. In this world, anybody that's had to deal with life insurance, there is a variety of products. There's a variety of applications and why you use it and where to use it at. And, it can get a little confusing, but when you really break it all down, there are two primary reasons to buy life insurance. You buy life insurance if you love somebody or you owe somebody. And Paul, would you like to kind of expand upon that?
Yeah, I couldn't have said it better myself, Trent. I mean, the love somebody is really family. So you love your spouse or your children. Life insurance is obviously a unique product that provides a death benefit should things happen in life out of sequence. So the love of having income to replace you if something happens prematurely for your spouse or your children, that's the love part. The owe somebody is either you have a mortgage, you have a business partner, maybe you have a buy-sell situation, you have an employee, a key person that should something happen again out of sequence and somebody die prematurely, you have a death benefit to replace that person or to hire a headhunter to replace that person. And then the other O would be, and we do a lot in this realm, is estate taxes. So unfortunately, in the way we work in America, the better you do, the more you owe at the end. So there really are two reasons to buy life insurance. Either love somebody or you owe somebody.
Thanks, Paul. And moving on, a lot of times we take for granted, everybody that we work with has a clear and firm understanding what life insurance is. But when you really sum it up, life insurance is really a contract between an life insurance carrier and a policyholder, which effectively is guaranteeing that should an event occur, that whether it's a premature death or a death of that policyholder, that the life insurance carrier will pay a specific death benefit to that beneficiary. And again, it could be to replace lost income or a variety of needs. But again, it is a contract. It is a binding contract between a life insurance carrier, a policyholder, and of course, then the benefits paid to the beneficiary. Paul, would you like to add anything to that?
No, I think you hit the nail on the head there, Trent. I think we should the next slide.
Sure. And to add to expand upon that, how does life insurance work? And again, I've kind of stated, what that agreement looks like. But along those lines, more to that is the fact that we have the flexibility and capabilities to add a variety of riders and to even broaden protection that client may specifically need, that may even be outside of strictly the life insurance death benefit. Paul, would you like to maybe add a little bit to that?
Yeah, sure. I'd say a couple of things. First of all, we as you see on the slide here, we have life insurance and long-term care insurance. And in years past, those were bifurcated, and you had a separate policy for each. Life insurance, I think, is self-explanatory. You pay a premium, and somebody dies, you get a death benefit. On the long-term care side, it really does one of a couple of things. If you can't perform 2 of 6 of the activities of daily living, bathing, continence, dressing, eating, toileting, or transferring, then a benefit is paid in long-term care. And you're either in a facility or home health care. We could talk about that one-off in individual situations. Or the other way a benefit is triggered is if you require substantial supervision to protect yourself from threats to your health and safety due to cognitive impairment. And in today's world, we're seeing that more and more. As we'll go through in a moment, most carriers today have married those two in terms of having a rider, as Trent mentioned, where you have life insurance with the ability to add a long-term care rider or a chronic illness rider.
Great, thank you, Paul. And moving on, we've covered a little bit of who's involved in a life insurance contract, but I think it's important, beyond the life insurance carrier, of course, you have the agent's involvement, who is providing the guidance and direction as to what is going to be the best product to utilize for the specific need that the insured has. Now, where you can get into some variations can be the ownership of this policy. In a very typical situation, you might have a husband and wife. Husband might own the policy on his wife and be the beneficiary, or vice versa. But also, you can have situations where the policy could be owned by a life insurance trust, as well as the life insurance trust can also be the beneficiary and the payor as well. It can be owned by a corporation if there's a situation where maybe we're trying to protect the assets of the corporation for an unfortunate accident with an officer passing away or premature death. So again, the ownership can vary in these situations, and we'll get a little bit deeper dive here shortly on that. Paul, anything you have to add to that?
Yeah, I'd almost, there's already 6 parties up there that who is involved. We're actually the 7th party, if you will, in Highland Capital Brokerage as the BGA. We're here to represent the agent, Trent, and his associates at Shepherd, as well as the insured. So we have contracts with our carriers, but we see our role as helping to navigate the landscape of finding the correct carrier and the correct product.
Great. Thanks, Paul. Now we're going to move in the direction of just a little discussion of types of insurance that are out in the marketplace. I think most on this call have probably had some experience of, they've either got some life insurance through their employer, or that maybe they've secured some insurance in the past. But speaking specifically about policies that typically provide temporary coverage, we would start with a term insurance policy. Now, over the years, we've gradually moved to the direction where in the past we would see a lot of annual renewable term insurance being utilized. Essentially, that product would, very simply, you pay a premium, and if something should happen to you, then your heirs would collect, or your beneficiary would collect that death benefit upon your demise. But each year that premium would increase in cost as you were getting older. What's really happened over the last couple decades is that it's really gravitated more to buying level term insurance for some of these temporary needs. And again, the definition of temporary can be different to a lot of people. It can be a short-term need where maybe I'm just trying to protect some debt that I have, and something should happen to me. It could be protecting a mortgage. But again, what we're seeing in the marketplace is a utilization of level term. And what I mean by level term is you can buy a policy and the premium is contractually guaranteed to be locked in and remain at that level for either a 10-year period, a 15-year period, a 20-year period, and even a 30-year period. So again, depending on the definition of temporary, 30 years buys a lot of time. So I think that each need is unique, but again, we have the variety of term options here that can cover that exposure. Paul, anything you'd like to add?
No, I think you've said that well on the term side, and I think you're going to go over the permanent next. The only thing I'd add on the term side is we today, some of the permanent policies have morphed into having like term insurance forever. The lifetime guarantees, as they call it in the industry, is guaranteeing a product until you're 120 years old. So a 50-year-old, it's almost like a 70-year level term policy, if you will.
Well, while you're covering that, Paul, if you want to go ahead and expand upon the permanent coverage side of things, feel free.
Absolutely. So, years ago, and in the beginning of our industry, whole life was it, and you overpaid a premium to get dividends and build up a lot of cash in policies. The industry morphed and changed into universal life in the 80s, where there was a separation between the investment side and the cash buildup. So it was more transparent. And then in 2000s, we added another layer, giving some control to the insureds in indexed universal life, where now we have a product that's instead of universal, you have more transparency in how cash value can build in a policy. And the industry has moved towards having an index products where there's a floor of 0%. So the index generally is tied to the S&P 500, and we have a floor of 0% with against a maximum of 9 or 10%. So that if the market goes down, you don't lose, you're at 0%. But if it goes up, you get the first 10%. And variable life does the same thing for those who have more affinity towards risk because you're picking individual products. All of these permanent policies come with riders. Two that we've illustrated here are the chronic illness rider and long-term care rider, which we talked about a moment ago. Grant, what kind of coverage do you have?
Well, Paul, when I meet with clients, I get asked that question a lot, because I think that, if it's the product that you're proposing to them, certainly they want to know, what do you specifically do for yourself? And as a business owner, myself, I'm trying to protect my assets, my income, and for my family. So I actually use an indexed universal life product along with a term policy in addition to that to protect those needs. But I think along with that, with my index universal life policy, I also have the chronic illness and long-term care rider on there, just to make sure that if an unfortunate time comes where I have to go into a nursing home or need some form of home assistance, I'll have the money there to take care of that and not put that burden on my family. Having from a life experience, my mother was in assisted living for nearly a year, and those of you in the market that are on this podcast or on this call today, the expense of that is to say the least, quite extensive. So it's definitely something that should be part of a conversation when you are talking with your Shepherd representative.
No question. And I'll just quickly add that I have maybe a little bit of each year. I have one policy to take care of my wife if something happens to me prematurely. I've got a cash value policy. Mine was a universal life from when it was taken out, and build cash value. I actually used it to help fund my daughter's wedding 8 years ago, and by taking a loan against it, and since paid it back. And that's the help retirement. And then we have, I'm a little bit older than Trent, so I didn't have an opportunity to have a long-term care rider on my policy, but we have separate long-term care policies so that there's not a financial burden on one or the other of us or our children should something happen prematurely.
Great. And we'll move on and talk a little bit about some of the uses for term. Excuse me. Again, we've touched upon a few of these, such as your mortgage and income protection. Especially when your children are young, to make sure that your children's college educations are funded, or their high school educations, if you're looking at private schools. We utilize term a great deal when we're addressing working with some of our commercial insurance clients. They may have a line of credit at a bank or a loan at a bank that the bank requires them to have a policy to protect that in the event of a premature death. Paul, are there some other areas you'd like to cover on term uses?
Yeah, and just to reiterate a little bit of what we said earlier, the key person is another need for a business to have a policy. Buy sell, if Trent and I are partners in a business and something happens to me, Trent would own a policy on me, get the proceeds, and be able to buy my share of the business out, because he may not necessarily want to be in business with my wife in the future. So that's another need or use of term insurance. But the last one, it's not even on the list here, is to guarantee some insurability. So sometimes the these term policies are convertible to permanent policies down the road. So some people might buy a couple of policies, having one that's kind of set aside in case something happens in your health, you can convert that term to a permanent policy. We're going through one of those right now.
Great. And then, obviously some of the pros on this, this is certainly the least expensive approach to buying life insurance. It's a pretty easy process from a standpoint. It's easy for us to sell and buy from the consumer. Especially with technology improvements, a great deal of this can be done online. The cons, as we mentioned, whether it's a 10-year, 15, 20, 30-year term, at the end of that term, the coverage does expire. So if coverage is needed at the end of that term, you have to requalify for it. And again, unfortunately, as we go through life, sometimes health conditions change, and we may not be able to secure that coverage, or it could be in a situation where it could be at a higher rate based upon underwriting. And like anything involving the life insurance industry, as you get older, the cost certainly increases and can get very expensive, especially as you get closer to 60 or above. The cost of the term insurance can be quite expensive.
Good point, Trent. Maybe we should move on to permanent coverage.
Sure. And with that, Paul, I think you were going to do a little deeper dive for us on the permanent coverage uses, and I'll add to that with a couple of things. If you'd like to go ahead.
Yeah, absolutely. So when we think of permanent coverage at Highland Capital Brokerage, we think of two things: either estate planning, and that can be tax planning, or estate equalization. That from a tax planning standpoint, in today's tax code, it takes a large state to have state taxes due. Per individual this year, it's 12.8 million. So you can pass 12.8 million free of tax. A couple could pass a bit over 25 million. And that's going to go up next year, another 800,000 or 900,000. It's going to be $26 million. But the estate tax code has a way Congress has structured this. It's going to sunset in 2025 and go back to 5 million. So couples with an estate over $10 million are going to owe 40% of their estate over that to the government. And so we have second to die survivorship policies that'll insure a husband and wife, as Trent mentioned earlier, generally owned in an irrevocable trust to fund that need. The other use of permanent coverage is really two different things. One is what we mentioned on term. We can design a permanent policy to have it last into your 100 or 120. And then lastly, we can use these permanent policies to build cash on a tax deferred, tax favored basis. So we do a tremendous amount of what that fourth bullet point is labeled LIRP, life insurance and retirement planning, where we overfund a policy. We have the cash, we're using it kind of like a super Roth. We're taking after-tax dollars, putting it into an indexed policy and funding a future need, be it retirement, college funding, a wedding, as I mentioned earlier, or if a business owns it, maybe a supplemental retirement plan for a key employee or one of the owners.
And wouldn't you agree, Paul, with that planning? It's sometimes we have to explain to our clients that it's in some ways it can be almost the polar opposite of death benefit protection, because in a lot of cases when we are trying to create this additional income for retirement, we will actually, depending on what the client wants to contribute yearly to the policy, we actually will go in and do a calculation of what's the least amount of life insurance that we can buy, so that the majority of that money is going into the cash value side of the policy.
Great point. Sounds counterintuitive, but that's exactly what happens. We use for the unique tax buildup natures or tax-free buildup nature of life insurance. So good point, Trent. Thank you.
Yeah. And moving on to, there essentially are three monetary components of a permanent life insurance policy. Again, we touched upon several times the death benefit, which again is paid to the beneficiary when the insured dies. The premium, of course, is the contribution to the policy that the policyholder pays, money for the insurance, and this money covers that cost of the insurance policy itself. And then, as Paul mentioned, this permanent life insurance are one of the last products out that in the marketplace where essentially we have the capability of earning interest on this premium and having it available to us to withdraw or borrow in case there is an emergency, or pay for a wedding in Paul's case. But I think the most important aspect of this is this cash does accumulate on a tax deferred basis. And if we structure it properly, the cash value can be distributed on a tax-free basis as well. And I think it's very, very important because it is definitely one of the last vehicles out there that you can accomplish this with. Would you agree, Paul?
Yeah, no question. It has the properties, as I said, of a super Roth. So if whatever your budget might be, we can structure a policy to accommodate taking excess cash and having tax-free build up, and then done properly tax-free distributions.
Exactly. And we'll move on. That will get us towards the end of our presentation. But again, I know we have folks on this call today that are currently Shepherd clients, and if you're not a Shepherd client, just Trent's little infomercial for you. We are one of the 50 largest independent insurance agencies in the country, and we represent literally every top carrier in the marketplace, whether that be from the life insurance side of things through Paul's organization, through Highland Capital, or from our other divisions, whether it be our benefits division or property and casualty division, which would be in business insurance and personal lines insurance, personal auto and home. Again, there's very little that we aren't involved in as it relates to the life insurance industry. And then we have a separate side of our operations as well, Shepherd Financial, which I'll give a plug from the standpoint of 401k planning and for individual wealth management needs. And with that, if you have further interest with regards to some of the items that we've discussed today, or like to have a conversation, please feel free to reach out to your Shepherd representative that you're working with, or you can reach out to us if you're not working with someone specifically at info@shepherdins.com, and we'll certainly be back in contact with you to see if we can help you with any needs that you may have.
And so now we want to open up the floor for questions. If you have something you would like Trent or Paul to address, you can go ahead and ask those now in the chat. And if we do not get to your question today, we will respond to your questions following the end of the webinar in the follow-up. The first question that came in, Trent and Paul, is how do I determine whether permanent insurance or term insurance is the best fit for me, my family, or my business?
Paul, would you like to take that?
Well, sure. That's actually a great question, and I'd say it kind of depends on how long the need is and what the goal is. So if you have a temporary need, like for the next 10 years, I'm 55, I'm going to retire at 65. I need to make sure if I haven't filled all my retirement buckets up that I have some insurance to add to those buckets should something happen to me before I quit working. So it's kind of matching up the timeline of your need and where your goals stand. And it also another interplay in there is what your budget is. So if you can afford permanent coverage, it can serve a couple of masters. So you have a death benefit and a cash value that we just have been talking about that can be distributed later. So it really kind of depends on where your needs are and what your budget, and the fine folks at Shepherd Insurance can help you with that.
Oh, thank you. The next one is, how is underwriting and pricing of life insurance premium determined by life insurance companies?
Sure, great question. From the standpoint of underwriting and pricing, of course, your age certainly factors into this equation, but when you break it all down, it's really your overall health. So whether you're a smoker, non-smoker, we have a variety of rate bands that can be applied here, from you'll hear the term super preferred to standard to possibly rated if there are some issues. So, but the underwriting process consists of answering some health insurance questions, getting some general information, getting you examined, and sometimes, depending on how large the death benefit is, that exam could consist of just a blood and urine sample and some health questions, all the way to a resting EKG, or even a medical doctor's exam on you. But these are some of the components that factor in, and of course, lifestyle. Insurance carriers will request typically medical records in a lot of situations to see what the doctor's notes have, and so all those things, when all gathered, will result in what type of offer the life insurance underwriter provides.
Yeah,
Paul, anything?
I would add to that. Obviously it's actuarially determined early on. How old you are and what you're getting and so forth. But it's like Trent's saying, it's just like buying your homeowner. If you live near a fire hydrant, you might get a discount. Well, in life insurance, if you take care of yourself, you might get a discount. If you work out, if you don't smoke, if you have good habits, and so forth. And then the other answer to this question is kind of where we come in. So if you have diabetes, we know which carriers are better at underwriting diabetes. If you smoke one cigar a month, we know which carriers are going to, turn the other way on that and not give you smoker rates. So that's where we work together with Shepherd in trying to find the right carrier for your particular lifestyle.
Great, thanks, Paul.
All right, one other question is, how do I get a quote or schedule an appointment for a discussion of my specific life insurance needs?
Well, that's an easy one. You can either reach out to us as I mentioned previously, at the info@shepherdins.com, or you can reach directly out to our website, or obviously if you're currently working with a representative, if they can't address the need there, they will pull in one of their teammates who specializes in this area. Or frankly, feel free to call Shepherd at the number shown on the screen, or you can reach out to me myself at thunt@shepherdins.com, and I'll be happy to help you or get you pointed in the right direction.
All right, thank you, Trent and Paul. Thank you to all the attendees. I believe this is all we'll have time for today. As mentioned earlier, the recordings, slide decks, and questions will be emailed to the email you registered with within the coming days. Be on the lookout for future webinars from Shepherd Insurance. Thank you again, and have a wonderful rest of your day.
Great. Thank you, everybody.
Thanks, Catherine. Thanks, Trent.
Thanks, Paul.